And welcome to another session of Sunday Setups. Today we have the main man himself, Jay,
How you doing, my bro?
combined with me, of course, the one and only Vel. We're going to take you guys through the charts. Today we've included our faces. It's always nice to put a face behind the voice, despite how bad our haircuts are. Um, Before we get started, as usual, be sure to check out lickcapital.co.uk. We've got some really cool features which can enable you, if you're new, to check the market out in its entirety through listening to our podcast or by checking out our blogs right at the bottom of our page. We really do provide you guys with an in-depth understanding in layman terms what's actually happening in the world of financial markets. With that being said, of course, we've also got a fundamental definitions page. This really gives you an understanding and a breakdown of what these things mean in the news. So, for instance, PMI, the monetary policy, GDP, unemployment rates. So when we're looking at the economic calendar, of course, these things now have a lot more clarity and understanding the implications of what they can be for each currency. So without no further ado, I'm going to take you over to the DXY and show you guys what I've got on my cards for this week ahead. Now, we did mention a few weeks ago that we was looking for push down, and we really did see that. We just recently released a podcast as well, so check that out on all major streaming platforms. The information that we've provided with you guys has just been about telling you that we're predicting the dollar to lose its strength, to lose its potency, and that's what it's done. So now that we've had a very, very big decline, over 3 consecutive weeks, we can see now imbalance has been formed. There's, of course, a lot of sellers who was able to catch this move, but also a lot of buyers that's been taken out. So, we've had another institutional level met around the 96 handle. And now what we're looking at, price came to as low as 96 on the head, okay, even beneath that 95.84. So what we're really looking at now is just seeing price come back up to an area of structure before we can think about price potentially turning around and continuing lower. Long term, I'm looking for the dollar to bottom out. But, when we're looking at the higher time frames, we can't ignore the fact that there's still a nice, juicy equal high above. So we have to be careful, mindful that price can still go higher. If we go over to the line chart and we zoom out, we can actually see that price is actually bullish. Since 2008, we've had a bullish run. We haven't had any new lows taken out apart from the ones inside of here. Everything else from a monthly chart is actually still bullish. So, we could see one or two things. Price come a bit lower to take out these equal lows within this zone here around the 94 level before price looks to continue pushing higher. Because what we would like to see is these highs taken out 102, if not higher, just to make that short a lot more juicier. But, with that being said, economically, there's a lot going on within the USA. And, in terms of understanding how strong the dollar can be, given what's actually happening, it's very hard to actually decipher and say the dollar should gain so much strength. The more protests, the more riots that's going on, the larger the excuse the governments have to keep pumping money into the economy through fiscal stimulus packages. But at the same time, the more money they print, the more they weaken the dollar. So it has its pros, it has its cons. It's quite interesting to see what's actually going to happen. But with that being said, just what we're looking at on the weekly, we want to see price come back up. Not as far as 99. I wouldn't be surprised if price came as high as that, but we would want to see price come to around the 98.30 level to see what it does. If we're on the daily chart, we can see here that this was really, this is a nice clean level that we'd expect now to see price come up and mitigate from. So we're going to keep our eyes peeled to what's happening. Monday, we won't really be expecting much. As we go back to the economical calendar, we can't really see much on the cards for Monday, but throughout the week, the news is pretty much filled with pound and dollar news. So we've got a lot of GDP, PMI results on Friday as well. So there isn't really too much in terms of majorly important, apart from GDP, CPI, and the PMI. We can't really see much that can actually create more volatility than what there already is. Moving on, I will be telling you guys about US 30. Now, US 30 is definitely a pair to watch alongside the German 30, alongside the S&P 500 and the Nasdaq. Okay, indices are on one side of the fence, and currencies are on the other. So a good way to kind of understand how trading currencies can help you is by analyzing the strength of currencies. Okay, analyzing the strength of currencies can help you understand if the smart money is being pushed into equities or being driven into currencies. So the DXY is going to help you understand that. What we are looking to see really with more fiscal stimulus packages coming into the economy is we should really see the all indices continue to push higher. Equities should push higher. If the dollar's going to bottom out, then the equities has got to go for it. So vice versa, you know, if the dollar's going to regain so much strength, then the equities has got to give way and recline. Now, if that does happen, what we're looking at is areas beneath where we could look at potentially buying from, if not, you know, entering a trade if we're not already in it by the time price comes to as low as these levels. We've got imbalance areas and an institutional candle around the 21,500 level, and some more imbalance down combined with a lit block. So there's reason for price to come lower. Okay, if you're looking at the weekly, you're not filled with much confidence, but what we can see is there was really a level here, which unfortunately we missed this trade. And you know, the art of being patient is that, you know, if you get to the train station, you're 30 seconds late, even 10 seconds late. Once you see that train moving, it's too late to jump on it. So the same factor we're having to practice, which is, you know, if we've missed our entry, we've got to let it ride. So maybe we get a pullback up into an area that can give us an opportunity to short. But we really want to see how the week opens first. Okay. My personal opinions is that we're probably going to see a gap down. I would like to see what happens around the 24,670 level. This was a level that we found quite useful to catch the first buy. So we'd like to see how price reacts around this area again. And, you know, my green highlighted levels, they're the institutional levels as well. So they're also levels that I look at for a reaction to see if we're able to get into the trade based on what analysis we have. Stay tuned in Discord. Of course, we'll be bringing you guys all the updates as we usually do, which would, of course, give you guys a chance to catch these trades when they're ready. My last pair I'm going to go over is gold. Gold has been working wonders. Okay, whilst everything's been going on, gold has been, you know, moving forward, moving back. But really, the ultimate direction gold has been moving is up. Okay, we had a pullback, of course, around the 1675 handle, which was perfect. Really, you know, a lot of the time we can get caught up in looking at the smaller pictures, the hours and the 4-hour charts, and, you know, failing to really see the overall picture. And we did call the level of 1749 being hit. It was hit last month, or 2 months ago, excuse me, to the T, when that the madness happened in Iran, I'd want to say, with the oil and gold shot up. So we had that level here really respected and touched, and since then price kind of failed to close above it, pushed back lower, but now it looks like price is going to finish strong, finish on a high, and we should really be looking at 1800 as a level that we would like to be shorting from. Gold is a buyer's market right now. Okay, anyone shorting gold, you're going against the grain. So I wouldn't advise you to short gold unless you've got a really good setup that can, you know, provide you with the confidence to believe that price, you know, doesn't need to continue climbing higher. So with that being said, you know, this is a train that we're not on, but we will be monitoring closely this week to see what we can get from this. And that's just pretty much seeing if, you know, these levels beneath, all of these buyers can get wiped out. If all of these buyers can get wiped out, this will really fill us with confidence to potentially take a trade now, maybe if not off of that level here, off of this level, you know, there's some imbalance beneath as well. If we could catch a trade off of the 1656 level, it sounds like a lot, guys. It is a lot, okay? It's a big move we're expecting to be able to catch the move going up. We're trying to buy, okay? We're not trying to sell unless we have reason to. What we are, of course, mindful of is just seeing how price fares out and opens up on Monday, or tonight, excuse me. We want to see if price can close, or price is closed here in the level, but we want to see price officially close above the blue line, okay? if we can get price closing above 17.49, that can give us more confidence to believe that gold, will have its pullback, which is natural, but then of course allow us to look to continue going higher. Without a pullback, of a substantial amount of size, then it's not a trade that we're going to be looking at. But with that being said, there are a lot of possibilities that can happen very quickly. So it's very important you guys keep in tune with the Discord channel, with our fundamental updates. A lot of the time, our fundamental updates give you the real trading signals to what you should be looking at. So it's just about using all of the resources that we're providing you with to your advantage to have a successful and safe trading week. That's me out. I'll pass it over to you, Jay. Remember, every day is money day.
Yes, it is. Let's get it. All right, then, guys, I'm going to take you through a few pairs. I'm going to start with AUD/USD, and I want to just give you guys a brief overlook of what the weekly is looking like. So definite room to the downside available going off of what we see on the weekly, as it's been bullish for some time, and we have had this high wiped out here, but it has created a double top. So I do believe we are just getting a retracement on the higher time frame. So if we head down to the daily as well, we do have some areas where we can see price definitely get towards. So it's definitely due a retracement, just in regards to, we see this big engulfing candle. So that's definite selling pressure showing. And the areas we have highlighted where the buying power really started from. So we can definitely see some mitigation play around the 66,700 area, predominantly this candle here, and we also have a candle a bit lower than that. So we do have areas, considering what we're seeing on the weekly, that it can come down to, because this weekly candle stands out for me. But you just have to then refine which areas you can actually see a movement from. So I would expect a reaction from this first area here, in order to maybe continue up and wipe out this double top that we have now created. So I am overall bearish on this, but I don't really like the fact that they've left that equal high there. So for me, I feel like we can get the retracement lower in order to then wipe that up above. So definitely stay tuned for this one. It does look like a good setup. We did actually give this setup out for the sell last week in the charts. If you are in our Discord and you check the chart channel, you would have saw that there was a sell scenario actually available. So definitely tune in for this one regarding the opening of the Sunday, tonight, seeing what it's saying, because Aussie can move during the Sydney session and it can move during the Tokyo session. But yeah, I do favor a move further down. So if you haven't looked at an entry for a sell, maybe see how we are looking towards the start of pre-London session, to see if you can gain an entry, because it is going to be worth it from a risk to reward perspective. Going to show you guys oil as well. Really thinking that we can actually get some pushes higher with this. But I do want a retracement lower first. So, we can pretty much see where exactly oil could be heading to, or should be heading to, in regards to filling in some of the imbalance areas, as well as, this candle sticking out, in regards to, being the last push up before we got this super big move to the bottom. So just going off of the time frames that we're seeing, oil, like I said, would favor a retracement on the 4 hour. So I did post this earlier, but we didn't actually get the retracement. So this area here, we did have an equal high here, but this is actually gone above this area, hence why we've got this retracement down. Like I said, I would like to see a real retracement from the swing that we have here. You can see this candle that I've got marked along with the imbalance area, which looks great for me. But I am also aware of this area here also, where we got these last two down candles and this push up. So I would like to see the imbalance filled. But overall, oil can be very fundamentally influenced, so it doesn't have to fill in these areas. But I am hoping to get a retracement on this. I'm not going to be selling it because it is very bullish at the moment. So I'm not trying to sell it down. I would rather wait for a buy opportunity because it's going to be more of a swing trade, as you know, we try and target the $44 area. So I will post the updated version of this in the Discord, so definitely look out for that. And last but not least, I'm going to finish on the euro pound. So we did actually give this out in our copy trading channel for you guys that are still holding with us. Your TP1 should have been hit. So it's looking great so far. Again, we can see a retracement. So if I go to just the daily and weekly time frames, we have got overall targets higher. This candle to me is where I will be looking to see price eventually hit. We're about 100 to 150 pips away from this region. So, you know, we are still bullish on this. So whether we get another pullback, just going off of the daily area, we can see this slight imbalance here. But it does not have to fill this area, of course. But we do see an imbalance area being shown here. So I would like to see, you know, if we can get another retracement and another entry to add, going off of this area here. But, you know, it does not have to do that. It is very bullish at the moment. It does not have to do that. But if you are holding and you do see price coming back down, you know, you shouldn't be scared about your position shortening. You should be looking to add, because our entry was pretty low, you know, at the 89 150 area. So you should be in some great profit now. And even if we are getting a retracement, it's you know, it's been bullish for some hours or a day and a half, I should say. So definite re-entry possible, because our higher term targets have not been achieved or met yet. So if you didn't get an entry on this, like I said, I will be posting this updated version in the Discord in order for you to tune in again. So those are what we're looking at right now, guys. I'm not going to throw in everything right now. We're going to see how the markets open. There's no real major news this week, so we should get a pretty technical week. And what I mean by that is the chart should, you know, show you what exactly it wants to do when it does start forming. So just going to let it breathe coming into the Sunday session opening as well as the Monday opening. So we don't really get the major moves at the start of the week. We're just going to let it play out, but we will update the Discord with that. So if you haven't already, like Vel said, please check out our website at www.litcapital.co.uk so that you can, you know, check out our courses and our mentoring schemes. And, you know, also we have some free stuff in regards to fundamental definitions, if you guys are not familiar with that, which is going to help you when looking at news events as to what exactly the effects and causes are for the events that unfold. As well, if you haven't, please like and subscribe to us on YouTube so we can bring you more content like this. Okay, if you found this video useful, please leave a comment as well, man. It's much appreciated. Remember,
Every day is money day. Peace.